Good morning, team. Happy Saturday. Happy weekend. This is the weekend video. Uh, okay, so pretty interesting week. Um, Down week overall. Pretty much we're still holding this low here, which I think it will definitely get broken. I won't say definitely, but I'm pretty sure the tide is turning for a continued down day. Um, it's still, a higher low, but it ended up at the bottom of the day on higher volume than average. That's not a good sign. As I mentioned, I think on Thursday that I was like kind of looking for a Friday, a start up big, maybe take out this high here and then flush down. So we didn't take off this high, but we definitely opened up high and then we flushed down. It was just, it looked to me pretty telegraphed. Again, I have no idea about anything. I'm just looking at the chart and that's kind of what I'm seeing. We still have this downward 21, downward 50, death cross right here. Um, this does not look good. I don't see this doing this in the next 30 days. I see it doing this, then kind of like, and then. So it's gonna take months. This is gonna take months to repair. I mean, it's been 3 months. I put these arrows here so you can kind of see again to reiterate. Once you break the 50, you basically don't look back here. Even here, if you broke the 50 here, um, you never really had a higher high. So in theory, once you break the 50 and you don't reclaim it, um, it's all downhill. Even here again, you broke the 200. Once you break the 200, you definitely never had a higher high. So keep that in mind with the stocks as well. I mean, the 50s is a very key moving average because that's what institutions kind of base their long-term decisions on, whether they want to add to it or they want to cut ties. And when you have stuff like that on higher volume, like big down days on higher volume, just doesn't look good. Um, I still have reactivated this trend line here to kind of see when we start going up, what gets hit first, the downward one, or the upper one. We'll see if once they meet. I want to kind of see how idea where they're at. But again, same kind of concept. Um, Everything's just going down. I'm looking at Monday to be another down day, just because Mondays most of the time is a continuation of Friday. I said again that we should kind of like maybe come up to this high here and then flush down, and that's what we did. Um, we need to take out this high again, before we take it. Then we got to take out this high. So there's a lot of climbing to do here overall. So I'm just talking about the same thing over and over again, just basically in the point across. We are in a down market. Down market. So 3 out of 4 stocks behave as the market behaves. So it is not a good time to be buying stocks. 90% of breakouts fail, over 85% of breakouts fail on down markets. So even though might have a great setup and it looks perfect, it most likely won't sustain because the overall market is going to drag it down. The weight of the market is going to keep it down. So it is not conducive to going long for more than a minute. I mean, because you've seen it during the day where you have like this 200-point swings where everything looks great, and then like at 3 o'clock you just have this flush down and then it just sells off. Um, go back to this 15-minute chart that I keep coming back to. Um, we had this trend line here. This is downward. This one that I had here that I kind of met, we broke it down. Even this one here, we had these 3 points here hitting it, and then we broke that down. I mean, drastically. The last, like, half an hour, hour and a half, 2 hours of the day, it was nothing but just flush and, very, very high volume the very last 15 minutes of the day. And it was increasing volume on sell-offs. That is not bullish. That is the definition of bearish. So, do I think we go down or up on Monday? I think we continue down. We might have a little, but it just continued selling pressure. Institutions are not coming into this market anytime soon. So again, Fed meeting on Wednesday. I am trying to get myself super light on Monday and Tuesday. I still have some of my SQQQ, so I'm still shorting the market. Made really good money on Friday, on Thursday, on Tuesday, on Monday, just because of trying to position myself, how I see things working out. I reduce exposure into strength, so I'm taking profits as the trade is working in my favor. So at any point, if it doesn't, I'm already secured gains. And then, our worst case scenario, I break even on my last 25%. So I made profits on everything else. So that's what I have on SQQQ. I also have one contract left of USO. That worked out real nice on Friday. I'm keeping it for Monday to see what happens. I'm guaranteed a winner there. I closed the Facebook trade because that was profitable, very profitable. So no reason to keep it over the weekend. And then I have just the remaining 25 shares of SLB, which was profitable on Friday. So again, it's 25 shares. So I'm pretty much, like I said before, I'm probably going to be flat on that. And I have my 100 shares of NVIDIA, which is covered. So I have a good maybe like 20% coverage on it. So NVIDIA will have to go down like more than 10% for me to kind of like hurt a little bit. So I'm secure keeping that one for now. I am currently just like, I think I'm net 25 long delta, just because I cut off so much of the exposure of the SQQQs on the TQQQs puts on a closed Facebook. These were all shorts. So my short exposure got reduced because I was taking profits. So net, I'm just like 20 delta long. So even if you have a big down day, I might get hurt by 0.5% on NVIDIA net with the covered call on it, and I'm gonna make a lot more than 0.5% on my remaining SQQQs. I'm up currently 41% on those. So if you go down, I'm probably gonna take it out at 60, 55, 65% gain, and just get flat for Wednesday. I want to get flat for Wednesday. I do not want to have a lot of exposure coming into Wednesday. Let me look at the S&P. Again, just everything's sold off. The S&P relatively is a little bit better because if you remember, see this trend line right here of higher lows. It's a little bit flatter. Look at the SPY. It's a little bit more angled up. That means it's a little bit stronger relatively. But I keep saying about this death cross coming up. This is not promising. You don't have a death cross and then a week later we just bounced up. That takes time to resolve itself. I mean, look where we've been since this happened. We've had all this still. So, we didn't just the next couple of days just take off again. We actually kept on going lower. So, is this going to happen on the SPY? I have no idea. But what this chart is telling me is with 100% certainty, there's a higher probability that we do this faster and sooner than we do this. Don't you agree? From what you've seen here? So why would you want to buy stocks to go long if the probabilities are that we still have more of this before we get this? Before we get this, we still have all this. So before we get, you know, this, we still gotta all this. I mean, even if we get up here, that is still not an uptrend. I mean, yeah, it's a big move, but it's coming up to the 200. It's coming down to a falling 50. It could fall back, you know, it could fall right back off again, just like it did on these, hitting its head on the 21. Now maybe the 200 will be hitting its head, then the 50, and then we start breaking, you know, previous breakout points to the downside. Then we can continue. Just like, you know, let's say back here, you know, once we broke down, we came back to retest, and then we sold off again. Not until we kind of broke this, we had a sustain, we tested the 50, but closed above it. Then we took off for a nice little rally here. You know, this was a good, nice what? You know, April 26th to got a good month. I mean, a good month of this, you make good money. You don't need much. You know, if you have 3 or 4 or 5, 6 days of up days, whoo, that's really good money. You know, right here, and you avoid this crap, and you don't give it all back. You wait, and then you take this. You know, you don't try to anticipate it way down here because it's got to break the 50. So again, I'm just saying the same thing in many different ways. We're going down. We're still going to go down. We still got to go down further before we go higher. That's basically it in a nutshell. Don't buy here. Don't have a lot of exposure to the long side. And if you're underwater in stocks, you might want to cut your losses because you're going to get a little bit more underwater. It's just not conducive to a long making money environment anytime soon. I don't see. I mean, look at the leading stocks, the ones everybody knows about. Apple, you know, this is his high right here back in December. So you had 3 months of, like, you know, choppiness. Tesla's the only one that's holding up pretty good, but, you know, but still, I mean, you had, you know, the highest hours before here in November. You've been downhill ever since, you know. I mean, come on. Do you want to be involved in Netflix? Yeah, it's Netflix. My God, you know, it's Netflix. Everybody has Netflix. Netflix making money. Okay. But do you want to own Netflix? You know, after like December, let's say, you want to own Netflix when it breaks the 50 right here? Let's say, okay, it's Netflix. You know, let me hold on to it. It broke the 50. The next day, it didn't recoup it. The next day, it tried, didn't recoup it. Then it's below a 21. Then it breaks the 9 again. You know, to me, and okay, let's say even here, I'm out right here. Okay, I'm out at, let's say, 580. Guys, it's at 340. That's 240 points, you know. And then this gap down here, PayPal. Everybody knows PayPal. Everybody knows, right? Death cross right here. The 50 broke down to 200 right here. Where were you at this day? You were at 225. You were less than $100. Just be realistic with your expectations. The chart doesn't lie. This is your highest high right here, 310. 310. Back in July. Since July of last year, you have not seen a higher high. So everybody that owns it over here, it's losing money. Everybody. It broke the 50 right here. They say you got out at 269, 270, around here. You know, yeah, you had a little pop to 90, 96. It wasn't sustainable, so you got stopped out again and downhill. Square, same thing. Broke the 50 right here. Since November 5th, I'm out. This would have been 225. That's it. I mean, that's worst case scenario right here. You get out at 210, 220 right here once the death cross happens. High volume. Look at this, high volume. That 3 down days in a row on the biggest high volumes. Clear sign you want to get out. Let's say 200. It's at 100. So that's tough. That's square. Snap. Everybody does know Snap, right? Broke the 50 right here on a gap down earnings. It's a $30 stock. It used to be 80. That's more than 50% down from its high. Even my lovely Nvidia, it's holding relatively a little bit over here. My cost, just so you know, my cost basis is 175. That's my cost basis because I've sold so many covered calls on it. I own it at 175, so that's why I'm kind of still good on it. I won't start losing money until like 170. So, you know, but again, once I did not own it from up here. I wasn't buying it up here and then I kept it. I actually bought it when it was somewhere. I think it was when it hit the 200 right here, sometime in February. I bought it. I think it's like a 220 or something like that. And then I've been selling covered calls on it, so that's why on my shares on their own I'm probably break even, but the net cost of my position, it's 175. So that's why I keep selling the 175 puts on it, because that's kind of like my break even on these shares. And then I'll just be adding at my same cost. I wouldn't be adding at a higher cost, and I'm getting premium on it. So I'm getting another $500 on it. So it's really 170, etc., etc. So, but either way, you don't want to own Nvidia if you're up here. It breaks to 50. I would not have been in it. If I own it at 313, I would not have been in it below 285 because it broke to 50. Take my loss and go. And get out. And if this breaks 175, I'm losing maybe like $300, and I'm getting out at 172. That's 100% for sure. And then waiting for it to recoup again. Google. Flat for basically from November to beginning of February. Didn't go anywhere, and you had this to suffer. If you let's say you still owned it, let's say again, if you apply the rules, you get out right here when it breaks to 50 decisively on this huge down day with huge volume, right here at 2,900, somewhere around here. That's 400 points ago. Death cross coming up right here. Death cross just happened right here, this day. So let's see. Let's go. We're gonna break about 2,700. I don't know. Amazon had this little big pop right here of 160, 70 points because they announced they're gonna split and they're gonna have some buybacks. It's just basically management manipulating the stock to get a little pop. They're gonna split 20 to 1, so this will be more accessible. It's gonna be a $100 stock rather than $1,000 stock. But again, death cross here, 50 broke to 200. You kind of just still there, but again, yeah, you had this nice little rally, but then you gave it all back. This is just drama, choppiness. You don't want to deal with any of this. But if you trade it correctly, once it broke to 50 right here, even right here, even it broke to 200 right here, and so you get out right here at 3,200. Let's say 3,200, you get out. That's 300 points away. Still from 37, so you're still down 400 points. Again, just the growth stocks are not working. What's working? Energy. We had this entry here in Oxy at 43ish. You're at 57. Energy is working. Number one sector. Let me see what else is kind of like stocks that everybody knows about. Oh, MU. What's another one? I mean, look at this choppiness. Look at this. Do you want to be involved with something like this? No. AMD, great breakout right here. Let's say you took it right here at 115. You took it all the way to let's say 150, around there. Or even if you got stopped out here, you took it at 130. You took it to 150. Since then, this is my trend line. I've had it here since since December. I'm waiting for this. I am, maybe that this new one should be here somewhere. But look at this 50. It's going down. Now the 200 becomes resistance. It's hitting its head on it. The 21, it's holding it. Again, 122nd industry group out of 197. So that's why we buy leading stocks in leading industries with great growth. It has great growth, but it's not a leading industry. Look at the relative strength line. It's been going down. So it's not a leader. So only being leaders. Okay, with all that said, I have some stocks on my scans that I did. I'm sending you the spreadsheet with all the stocks that I kind of came up with on my extensive scan over the weekend. If we do have a pop over the weekend, over the next few days, these stocks should work because they're all setting up for nice bases. So again, go small, test the waters. You know, we always have to be involved. Involved in the market doesn't mean buying something. Involved in the market is having your watch list, curate your top stocks, your setups, look at them, have your alerts set up, and once things start working, we have merchandise to get into and take advantage of. Again, I'm pretty sure Monday, Tuesday, and Wednesday are going to be extremely volatile days because the Fed's going to announce, they're going to say a quarter point, and that's it. The market's going to like it. We might have a little pop, and then that pop is going to go, it's going to come right back down again. Watch how it reacts on Wednesday. You're going to have a flush, and then you're going to have another flush, or you're going to have a flush, and then you're going to have the reverse. Then the conference after the announcement is what's really going to matter because in the conference they're gonna say what they're gonna do going forward. If they're gonna be more aggressive going forward, then we tank. If they're gonna ease up a little bit or as expected, you might have a nice little pop. So the market, it's a very, very smart, efficient mechanism that looks out 6 to 9 months ahead. So that quarter point is already priced in. Nothing's going to happen with that quarter point. That's already priced in. That's why because we're going to have a new cycle of interest rates increase, which we haven't had in years. So it's definitely gonna hurt the market. So that's why we're probably not going to have a sustainable, nice up rally until the end, the last quarter, the last 5-6 months of the year, because we have to assimilate, we have to consume all these new changes, which is the new rate hikes and the new way the Fed's going to be handling the market is not the way it handled it back in 2020 with COVID, when they have bazookas of money going into the market to ease the economy. So all that worked. Now they're going to do the reverse. They're going to increase interest rates to slow down the economy, slow down inflation. And then what does that mean for stocks? Stocks it's going to cost them more money to borrow to grow, so stocks go down. That's why we've had stocks going down. So again, I don't see us doing this right here for a while. For a while meaning like 4, 5, 6 months from now. I mean, we just don't do this, and then from this we do this. We meander around, we come back, we retest, and then eventually. So just be careful. This is what I have for Monday. Actually, for ongoing. This is just setups. Like I said, the setups are the setups. You put the alert on, and they could be there for a day, a week, a month, a year. Just leave them on. I wouldn't say a year, because if the stock doesn't hit that for a year, it's pretty much off, the radar. But this is what I'm looking at. VIST 845. I want VIST to take out this high right here. I have a downtrending trend line here because I want to kind of take a little cheat entry here. Low dollar stocks. So couple hundred shares. A 10-20 cent move. It's pretty much 3%. So you're not gonna lose that much money if you get stopped out. Stopping out will be like below this low right here. VIST. CRK 1091. I want to take out this high right here. It's a little bit of a looser, deeper base than I wanted to, but it's got good numbers, top industry group, good growth. Again, everything is energy, so that's what we have right now. Again, growth stocks are not working. I just showed you like the top names, so this is what we're looking at right now. So 1091 CRK. VLO. 93.81. 93.81. I want to take out this high right here. Again, nice little deep base here. I would like to see some more consolidation, but this is the play to 100, like I always talk about. We might get 100, retest it, come back inside, then take off again. So, if this triggers, because again, look at the numbers. Great growth, right? Great growth. Look at the earnings. Nice. If this triggers, I might take it just because of the century mark. Take it to 100 and make good 5-6 points on it. VLO. MPC. 81.46. 81.46. I want to take out this high right here. It's a little bit tighter, so I like it. It's a little bit tight like it was right here. This would have been a good one right here, right, guys? Take out 69 right here. 69 to 75. That's a 6-point move on a $60 stock. That's 10% move. It's pretty good. So I like it here at 81.46. NPC. The next one, EPD. EPD 2605. 2605. This high right here. I want to take out that little outlier. I want to higher than this number because it went higher and it came back inside. So now this is my new high here. But I have an alert inside of it to kind of keep me abreast. But my price trigger is 2605. Again, good growth, good numbers. Okay, relative strength increasing. Building a nice little shelf right here. That's what I'm looking at. Top 20. Nice growing earnings. EPD. MMP. 50.55. 50.55. I want to take out this recent high. Little loose, but even back here, if you break this little trend line right there, that would have been a nice move. Even if you wait till it gets over the 50, right here, this little shelf right here, that would probably been more. This is in a good market. This would be a nice cheat entry. On this market, if you take it right here, you would have had it maybe like 3 or 4 points. And you would have kind of stopped out. You would have taken the 50. You would have kind of stopped out. You waited for this drama to resolve itself. You weren't in it when you had a 3% down day here right here, went to the 50. So you wait for this to clear. Okay. MMP. The other one, DDS 276.29. DDS 276.29. Nice little shelf right here. I like this tight action. It's been actually tight action for a while just because of the market. It's retail, obviously Dillard's, but hey, top 20 industry group. It's got decent numbers, good growth. Their latest earnings per share was 252 back in February, and it had a nice little pop to it from the 200, and it held. So now I want to take out this high right here. We might have a little run to the 300. Same thing, century mark. That's 20 points. I'll take 20 points, and then sell half here. If it goes back down again, I get out, and if it keeps going higher, I keep the other half, and then maybe my next level is maybe like 325 in this gap right here, and the next level is 350. Then 400. Then if it takes out 416, that's how you trade this. And if it breaks down below this right here, that's when you get out. Simple as that. I mean, this was a nice little shelf right here. Nice little shelf right here. Let's say if you would have waited for that one right there, let's say at 230. Look at that. It never violated the 9. Never broke the 9. So if you get in here at 230, that's 70 points. If you get out, you get out right here, let's say 380, around there. Or when it breaks it, let's say, here, 360. Still, let's say you held it too long and you didn't take profits. You get out at 360. You bought it at 230. That's pretty darn good. So again, DDS 276.29. DDS. Next one, DAC. DAC, it's going to be 103.05. Again, this is what we talked about, you know. Here, 90. It went to 200. It went to 100, 102. Like I always said, that 102, 107 range. Then it came back inside. Now it's building this base right here. And then I want to take out. It's gonna probably take out 100, but now since it put this new high, I want this new high to break out to maybe 107, 110. Take some profits there. It might come back in and retest 100, and then take off again. So 103.05 DAC 103.05. Again, great numbers. Great numbers. Look at this growth. Top 20. And the last one, RHP. RHP. 95.05. Same trade, same concept. I'm playing the 100 move. Okay? So I want to 95.05 is right. Yeah, I want to take out this lower one right here because it's kind of decelerating. So if it break, the trend has been going down here, so I have this alert. So that means if it breaks it, it broke this previous low, it might have a chance to go to 100, and then I'm taking profits at 100. Okay, again, it's very loose, but this next looseness could be to the 100, so we can take advantage of it. And if not, you have a stop right below like 94, 93. So it's a very low risk entry. Okay, again, not necessarily top 50 or top 40, but great numbers. Great numbers. I mean, look at this increase in earnings per share. Estimated for the next couple of years. So not too bad. So again, that's what I have. Question: if they all hit, would I take them all? Heck no, no way. I might take a couple that are near the 100 mark, just to make that play for 100 and that's it, or maybe some of the lower energy priced ones, just because energy is it's kicking butt. I mean, look at the XLP. We had this entry here, let's say at 116. You've had a 10-point move on this, okay? So that was a pretty good trade. I got out when it broke the 9 right here, and I never got back in. So I went through all this. So I think it was like I got 121, something like that. So it's still a 6-point move. That's a 6-7% return in less than a week. I take it. So that was a good trade. So again, the overall market, guys, it's on a downtrend. Don't try to force the issue. Trading is not whether you're buying or selling stocks. Trading is analyzing the chart, looking at your setups, trading your edge, trading with an edge, and trading your system within having an edge. So my system is, I look for basis to form. My system not because I invented it, just because that's just what has worked for the last 200 years in the market, and it's just been documented that's what works. So I look for this. I look for breakouts in a good trending market, and I ride a trend until it doesn't. Simple as that. This trend is lower. I'm not forcing the issue. When the market is oversold, I might take a little bit more aggressive action. When the market is overbought, I might take a little bit of aggressive action shorting it, just like I've shown. I've put my cards on the table every single time when I'm doing it. I kind of said it even before I was doing it, so there's no secret. When I saw things being pushed down, I was saying, hey, market is, I'm seeing this, and then boom, we had this gap down, and since then we had this little peak here, but really we've been in a sideways to downwards market. So, if you want to do this and be aggressive, okay, now let's see now the next level of trend line break. Is it going to be this, or is it going to be now we come back to this line here? So now we have two levels of resistance. We got to go through 330, and we got to go back to 335 here to eventually get to the 340, 345, and 350 levels. So there's a lot of overhead supply here. All these people right here are upset because this, it kind of came back down again. So when you have a lot of overhead supply, that's why you have resistance levels, because once it gets there, people that were here, okay, I want to get out, I'm back to break even. So it pushes the stock back down again. So the theme is be careful, be nimble, be efficient in your trading. In other words, be quick. If you have a 3, 4, 5, 6% profit, lock it in, because this isn't a market that's going to give you 20% profits in a week. It's just not happening. Be careful next week, Fed meeting. I'll trade it accordingly when I see, and I'll keep you guys posted. Have a blessed rest of the weekend, and I'll talk to you guys on Monday afternoon.